What's up, guys? We're back again. All right. So we were going through looking at your comments. I put that tweet out the other day, and make sure to follow me on Twitter, guys. Here, if you aren't already. This is my only Twitter account. I'll never ask you to join a Telegram group or, ask for money. This is my only Twitter. Okay. I just wanted to say that first. But anyway, so a lot of you guys I was looking at stuff like you guys were talking about dilution, when is it time to go in, types of filings. So I want to go over some basic, really just like basic dilution in small caps. Okay, so there's so much when it comes to like learning this stuff. Listen, even me, I'm still learning every day. But it's really a matter of just starting with the basics. So Dilution Tracker actually has some good information here if you want to learn, about, like basic dilution and things like that. It does give you, this is for free, by the way, learning about understanding ATMs and S1s and yada, yada, yada. So I'm going to dive right in. I'm going to give you some basic stuff. So let's pull up some tickers. Let's think. I don't even know. I think this was one. I don't know why this popped in my head, that file. So every company, there's certain forms of dilution, right? You have offerings like S1s and S3s, right? That's like these here. You have warrants that usually are added into offerings. And then you have other things like convertible notes, you have an ATM, you have shelves. So I'm going to give you a little basic rundown of what each of these mean, okay? So here we go. So let's start with S1s. So S1s, S3s, they're all, it's just an offering, right? It's an offering plan that gets put in, like this one was just filed, right? So this is a resale of up to 10 million shares of stock, okay? Now, one of the most important things when it comes to stuff like this is reading the top of the page. So you see here, yada yada, these securities may not be sold until the registration statement filed with the SEC is declared effective. Okay, so what this means is, this is something that I didn't know when I was young. When I was learning, is when you file for S1s, right, S3s. This actual filing, a lot of times stocks would drop because they announced an S1, right? The S1 is not even able to be used until they file, like it says here, declared effective. So what does that mean? So that means, let's see if they have an old one. Let's just go to I don't even know, like a new ticker. So, okay, here we go. So when a company files an S1, for them to be able to use the S1, they have to then file a notice of effectiveness. That's this here. Okay? So when you click notice of effect, that means the dilution is activated and able to be used. Okay? So until you see an effect for whatever, S1 or S3 it is, like this one, this cannot be used, right? A lot of times companies drop because they file this stuff because people get scared. But what they don't know is that this is basically just letting you know that they're planning on doing some sort of offering and going to start diluting, basically, at some point. The thing is that they haven't actually started doing it yet. So there are times where companies file an S1 and it sits there for months before they file an effect, right? So that is one of the most important things to know, because a lot of people say like, oh, S1, that's terrible, drop. Yeah, I mean, it is bad, but in the sense of like an opportunity, well, if this starts dropping a lot because it filed an S1, there are a lot of times there's an opportunity to play a bounce or get something for cheap or whatever the case is, because they may just sit here and not sell anything, right? So that's like your S1. Obviously, each one is different. This is a resale up to 10 million. it talks about how this is probably just like we've entered to a prepay, blah blah blah. So this is just like paying stuff back, right? You have warrants. Warrants are usually attached to an offering. So let's look at one. I don't even know. MNTS. I think they just did an offering, right? So you see here, MNTS announces a pricing of 5 million private placement of common stock. Okay. So if you look and you go down here, right? They have. Let's scroll through. If they file it. This is the thing. So usually they're filed, but it may just not be filed yet. But so then you have like these offerings that get put in, right? So you see here, it's like it's 1.3 million shares at $3.75 a share. This dropped because of that. It wasn't, listen, these private placements are always going to usually be under the price because the person's investing a lot of money and they want to get it for a reasonable price, okay? But the thing that you have to look at is the actual filing of stuff. So, like there was a few of these Chinas that got put out. I mean, they didn't do any filings yet on them, but CHL I think was one actually. Here they announced an offering at 155. Okay, the PRs are good, but you really want to wait for the actual offering filing itself, because the offering filing itself is what's going to actually show the details of form. Oh, here we go. So the securities described above are being offered by the company registration form file 332945575. 33, was that this one? It may not be. This probably was a new offering and they just haven't filed it yet. But this is an old one, right? So let's look at this. This is an old filing, NFCHL, this F1. Okay, so they filed an F1. A week later, they effected it. So the actual filing itself shows you all the details of everything, right? So it's offering up to 6 million shares, Class A shares, and one warrant to purchase each share for each one, right? So what this essentially is saying, so a lot of times you get companies that, so let's say they do a $6 million offering, right? Or 6 million share offering, okay? A lot of those shares are also attached with warrants. So you'll get, each Class A, pairs with one warrant. So you get 6 million actual shares. You get 6 million warrants, which is 12 million now, right? And then you get the details of how the warrants are actually able to be sold. So one of the biggest things and most important things is being able to see if they're zero exercise. Now this one, they made it easy. They put it right at the top. So this says up to 90 million shares upon exercise of warrants to produce Class A at zero exercise price. Okay. Most of the time, I'd say 99% of the time, if there's a zero exercise option, which is cashless warrants, they're always going to do zero exercise. They actually even tell you, if you read the filings, which most people don't know a lot of the times, here we go. As a result of this feature, we do not expect to receive any cash proceeds. All right, I'm going to just highlight this. As a result of this feature, we do not expect to receive any cash proceeds from the exercise of the warrants because it is highly unlikely that the warrant holder will elect to pay an exercise price in cash to receive Class A ordinary shares when they could elect the zero exercise options to receive more shares than they would if they were to pay an exercise price. They literally tell you that we're doing cashless warrants. So, as such, holders of warrants may elect issue up to 90 million Class A shares and 90 million Class A shares upon exercise, yada yada yada, right? So if you read this from a week ago and you see the drop that happened on FCHL, which I'll pull up for you guys here. You see this drop that happened, right? It dropped 80%. If you read this a week ago, right? This is why filings are important. You read this, you see, okay, FCHL just approved just did an offering for 90 million cashless warrants. There's no way I would ever be in this, right? And this was when it was at, well, they did a split on the 20. They did a split, I think, right after that or right before that. But there's no way I'd be in a stock, especially at $2, when they just approved 90 million shares of being cashless warrants. It just makes no sense, right? And then you also knew when they filed in effect that they were going to sell at some point. So this is like little basic ways you're able to avoid getting caught in stuff like this because of the cashless warrants. The cashless warrants have been a killer this past year or so. They've been getting worse and worse. I don't touch anything that has cashless warrants. Even a lot of China's now, or they're announcing offerings and then the filings are coming out a few days later, and and it's just like you just know that if there's a filing that comes out here, you see there's nothing been filed yet, but if there's a filing that comes out here from this offering, I guarantee you this has cashless warrants attached to it. So there's no way I would ever touch the stock. It just doesn't make any sense. Like this is what I mean by playing clean plays, right? Like, could it be possible that FCHL, consolidates and bounces and, gives you a good bounce? Yeah, but it's not. Why would I gamble that? Like, what's the risk? The offerings at 150. I mean, not really. They have 90 million cashless warrants, so companies just put these high prices in to make it look good, but they can elect to do cashless anyway, so it doesn't even matter. It's just a complete scam. So there's just no reason to ever touch that, okay? So that's one way of trying to figure out, why a stock is dropping, right? Usually if there's a drop, there's a reason, right? You see this is the March 26 offering I was talking about. And then you see here, April 26 warrants, total warrants issued 50 million at 0, which is cashless. So, pass. Terrible. Garbage. No reason to look at this. Even if this runs 150%, no reason for me to look at it. Okay? So that's your basic with cashless and your S1s. Remember, you need to have the S1s effective, and you need to look at the actual filing and see if there is any cashless warrants or not, right? So let me look and see if I can find any other cashless ones for you guys. I think I have a list here. This one already they delisted, but that's another one. So then you have other things like ATMs, right? You have private placements. You have shelves, right? A shelf is, so I'll give you an example. CPOP was a stock that we were looking at, okay? So not all effects are because of F1s or S1s or S3s or F3s, whatever the case is, right? Not all of them are for offerings. Some of them are for shelves. So a shelf is essentially, it's basically you have shares on a shelf, and you can sell them for time to time over the course of, let's say, 12 months, and as long as it's effective. It's not like something that is just going to be dumped nonstop like that. A shelf is really something that they use. A lot of times companies actually activate them before they start pumping, because it gives them the availability to dilute, for without having, like, for example, CPOP, they have a $500 million shelf. So this will last them probably for their entire existence. Okay, so it allows them to kind of affect. They can dilute. Then they could, if it expires, they could just affect it again, and dilute. It's not always something that is so bad. Actually, shelves are, like, in my opinion, one of the least toxic, because a lot of times they're not able to sell as much as you think. So you see here, like, a lot of them have this called, like, baby shelf restriction. So baby shelf restriction, if you pull up, should talk about it in the F1. I actually did a tweet on this with CPOP. And talked about it a little bit, little education here. So you see in CPOP, let me scroll to where it said it. This okay. So our Class A ordinary shares are listed on NASDAQ as under CPOP, blah, 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 blah. As of January 27th, there's 61 million shares held by non-affiliates. That means that the approximate dollar amount of those was 30 million. So that's just basically taking whatever the amount of shares that they had times whatever the price was at the day, and that gives you the essentially market cap, right? It's the shares times the price is the market cap. Okay, so pursuant to, this is a SEC rule, in no event will we sell our securities in a public primary offering with a value exceeding more of 1/3 of our public float in any 12-month period. Okay, as long as our public float remains below $75 million. Okay, so this is gonna get a little, weird, or not weird, but this is gonna get a little in depth. But it's important to know, how complicated some of these things are, and how much in detail you really have to look, and how time consuming it is to really learn and read this stuff, because it's very easy to just look at this and say, oh, this is terrible, bad, they have a shelf, they're effective. Okay, yeah. The people that say that, they obviously don't know how to read, and they don't know, filings that in depth like this, right? So what I said here was, because their market cap was $30 million, right? It's below 75. That means that they have a baby shelf rule, right? So the baby shelf rule means that they can't sell more than 1/3 of their float in any 12-month period. Okay, so it says right here their public float was 30 million. 1/3 of that is 10 million. They already did an offering, if you look back here, for 6 million. So they only have 4 million left, right? So even though they have a shelf for 500 million, they only can sell up to 4 million of that, because they've already used 6 of it, if that makes sense at all. So if you look at the, if we do some math, right? So let's say the price is 30 cents, and they want to sell $4 million worth of stock, right? So 4 million, right? Am I doing this right? Divided by 0.30 is 13 million shares. So that means right now the most amount of dilution that they could have is 13 million, because they're physically not allowed to sell more. So yeah, it looks bad because it's a 500 million share shelf, but 13 million shares is not that much. And to sell that, you probably are going to need to pump it, right? And I mentioned this one. If they're going to do this, they're going to have to probably pump at some point. And if you look at CPOP is really starting to look a lot better. You know, it's really slowly grinding up, right? You can tell that, yeah, it traded a little bit weird, but you can tell that, you know, for them to want to start dumping like millions and millions of shares, they're going to need volume, and they're going to need it to move, right? Like if you look at their daily volume up here, you see it's trading like 100, not even 100,000 shares a day. It's nothing. So they can't even sell anything. Right? They don't even have any volume. So there's no way for them to sell anything if they wanted to, right? And CPOP's actually looking a lot better for people that are in this. Right? It's actually hitting a resistance right here. I still think it fills this gap at 50s. But this is just goes to show how important it is to read this stuff, because this is one of the things that I do to be able to find plays that I think are good. Now, you know, again, I tweeted this the other day that, you know, 90% of the stuff that I do and I post work. It's just a matter of when, right? Like CPOP, you know, it may take over a month, but I still think that it's going to work, right? Like I talked about this, when was this? February. You know, so I've been talking about this even since February, so it may take a while for it to go, but that doesn't mean, listen, that's just the way that it is. Not every play goes right away, okay? But it's important to be able to read filings. Remember we talked about reverse splits, right? So let's look, right? We look at the financials, we do a quick check. We see Cayman Islands. That's great. Let's do a quick look at if they have reverse split approved. They have nothing approved. I don't see any votes. If we look at here, there's nothing scheduled for them to go vote. So to me, that goes, okay, this is a good one. This one is a potential swing, right? They're probably going to have to pump. They've done past PRs that have pumped. They talked about having over 100 million in revenue. Pretty good, right? I can't tell you the exact day it's going to work, but I can tell you that in the grand scheme of swinging it, it's a good one. It should work, okay? So that's an example of being able to look at shelves and things like that. Like you have to really click and see. So like when you click on the effect, you can see what's actually affected. So it says here the F3, and if you click the file number, it'll bring you to where you can actually look at what the dilution is, what the actual filing is, and this is just for a shelf. Okay, so a lot of times companies will drop because they file a shelf and people sell it off, but it's like, well, you know, that doesn't mean anything. It's just a shelf. That doesn't mean that they're dumping shares. A lot of times I get really nice ones for cheap and be able to play nice bounces because of that. Okay. Then you have ATMs. So an ATM is, you know, you have like ATMs. BTOC is actually an example because they, you know, whatever, you know, like they paid off. But let me just pull it up. They don't really have anything except for this SPA. But an ATM is essentially like an offering, but it's more of, they don't file, it's not an effect, they file a prospectus. Sometimes it's called like a form 423B, 423B or whatever. Like ABP had one, I remember a long time ago. They filed a prospectus here, and the prospectus was just talking about how they're activating part of their ATM, you know. If you look at that, like it'll look at like their past ATMs. You see how it says prospectus 424B3? That's usually to activate a ATM, like activate a portion of their ATM. So companies that have, you know, ATM, they file them, but a lot of times they only use certain amounts. So let's just say I have a $20 million ATM. I could file a prospectus to use 5 million of that, use all that. Then I file another prospectus and use 5 million of that. Then I use that one too, right? I mean, DHAI had one, they delisted. Sorry guys, I should have been more prepared with pulling this stuff up, but that's a nice way to be able to look. If you look at their past 10Qs, like this is BTOC, right? So if you look at a company and you go to their financials and you scroll down, one of the things that I like to do is you're able to see how many shares authorized that they have, right? So here it says, like BTOC, it says common stock is 100 million shares authorized. So that means the absolute most amount of shares that of a float that this company could have is 100 million. That's pretty low. It's usually average a month. It's actually pretty low. A lot of them are like 200, 250 million. Doesn't mean that their floats are 100 million. Just means that their authorized is 100 million, right? If you scroll down to their shareholder equity, and their what's it called? Like their actual diluted shares. So like if you scroll down here, it says basic and diluted net loss per share, weighted average number of shares. This shows you the exact amount of shares the company has had for each filing. So this is really the most accurate way to be able to look and say, all right, since December 2024, or this is the period ending December 2024, back then the shares were 41,642,000, and then a year later it was 45 million. So they've only diluted like almost 4 million shares, a little less, like 3.5 million shares in over a year, which is nothing. If you break it down per month, that's like 200k shares. It's not a lot, right? So this is really bullish for me because that tells me that the company is not actively dumping tons of shares, right? Like ASI was one. If you looked, I remember when I did get screwed on this one. But their past, when they announced their here, this was, when was this? This was this September. So if you look back at September, okay. So if you look back in September, this is when we were trading ASI, right? You see ASI is 500 million shares authorized. If you scroll down to where it says weighted average of shares, you see from 2024 to 2025, 73 million, the new one, 106 million. So that means they diluted 30 million shares, which is why the stock kept dropping. So this is a good way to tell how often a company is selling and how much they're actually selling, because it tells you the exact amount in the filings here. So it's easy to know if you just know where to look. A lot of people don't even know where to look for this stuff. This is the fastest way to be able to tell, okay, they haven't sold anything, whatever the case is. INTS, right? That was another one back in the day. If you guys remember this was a great one, right? This was a really nice one back in the day. You see here, when I originally liked it, they ended up screwing me because I think they sold into the video, but you'll see, like, they file an ATM they file a prospectus to use the ATM, but it tells you a lot of times, as of the date of this filing, we have sold 190,000 shares of this ATM. So at the time, I liked it because it said, oh, well, listen, they have it active, but they're clearly not using it, and because they've had it active since 2024, and they've only sold 100,000 shares. It just happened to be because I did a YouTube video on them. I guess they saw the volume and wanted to use me for liquidity, like assholes. But whatever, it is what it is. Ended up making a huge run anyway at some point. So this is ways to be able to tell exactly how, what these filings mean, right? Like, it's very easy to do. Remember, guys, there's a few things that are important. Prospectus, right? This, when you click, it tells you we have previously entered into a market offering agreement, right? ATM offering, right? Tells you what it's for. Reverse splits. See if the company has a reverse split. This is 90% accurate. Sometimes it's not, but for the most part it will be. Just go to dilution tracker, hit reverse split, Control F, type the ticker name in here. See if they have a reverse split approved, right? Do they or do they not? Okay? Compliance, that's another one, right? INEO. INEO is a good example. This is the one I just put out the other day, okay? Reason I like INEO so much is because it's a low float stock. It's only 2 million, right? It has a history of runs. And you see that if you look at the filing from when they did the meeting, their shareholder within 180 days. They approved the reverse split. It was only within 180 days. That expired because this was August. It expired. So that reverse split approved is no longer anymore. Right? If you look at their compliance, which is right here, says they have until June. They may also be able to have another 180 days after that. Right? If you look at all these tickers that we talk about, like FMFC, all these tickers, every ticker has the same thing. If it's a US ticker, then it'll tell you, like, it'll have a filing of a delist failure. If it's foreign, it's just going to be in a 6K, or usually they PR it. You go here, you look right on the side, delist failure, it'll tell you what their minimum bid compliance is. Okay, they have until May 8th to regain the 180. They may also be eligible for 180 days. Okay? These are the basic things you need to know. You need to know what an S1 is. Do they have zero exercise? Is there... we'll do more in depth as I find examples. I'll write them down and we'll go more in depth. But you want to look at the offerings. Is there cashless warrants? If there's cashless warrants, just stay away. Don't even touch it. There's no reason to touch it. Even if it runs, it doesn't matter. Because you're going to end up saving your port more times than not if you just stay away from those. And in truth, will you miss runners? Yeah, listen, you're always going to miss runners. I miss runners all the time. It's impossible to get every runner. But us as traders, the most important thing is our portfolio, right? That's what we're using to trade, to make money. So you have to do whatever you can to do to protect that. So one of the things to protect it is not buying things that have 100 million cashless warrants, right? Like, it's just stupidity. Why do I think that that's a good buy when there's dozens of other plays that could be better? Just because people are talking about it doesn't mean that they're right. You got to be able to look and see on your own if it's right. If they're talking about things, right, and you look and you say, I don't know, I got to think of a ticker that just put one out, like, if you see a company that has a reverse split approved, right, or if people are talking about a ticker, you go on and you look and you see a reverse split approved, right? If it's, MSS, vote approved, people are pumping MSS, and you look at it and you go, all right, let's look at MSS. It's a nice bottom chart, right? Could it reverse? Yeah. Let's take a look at their filings. I'm going to do this live. All right. Let's just look at here. Let's look at their filings. What have they filed? All right. Well, they did this prospectus back then. This looks like it was an ATM. I'm sorry. This was a private placement. It looked like 16 million shares. You'll notice companies post floor price. People that post floor price, this is what they do, right? When you see a floor price, people say, "Oh, it's 10 million shares at a floor price of 10 cents, and the price is at 5 cents." And they go, "Oh no, the floor price is 10." Doesn't matter. Just because the floor price is 10 doesn't mean that they can't sell at any price. A floor price, all a floor price is to determine how many shares that they're actually going to get. So let's just say me and Joe Schmo, I did an offering with, whatever group, right? So Joe Schmo or Univest or whoever the group is or fund is that I did the offering with. It's for $5 million, right? And they have warrants, and the warrants are at a floor price of, it's 5 million warrants at a floor price of 20 cents, okay? The 20 cents is just to be able to put a cap on how many warrants that they have, right? If there's no floor price, they're essentially cashless warrants, and they can just sell and they get as many they want they can sell. It's a tool that they use to be able to calculate how many shares are actually available to be able to be sold. That doesn't mean that they can't sell, even though a floor price is 10 or a floor price is 50 or $1. If it doesn't matter what a floor price is, you can sell at any price unless there's a reason that it says specifically that they can. They can sell at any price. It does not matter what the floor price is. The floor price does not mean that they can't sell below it. It just gives them the ability. I think I tweeted about this too. It just gives them the ability to be able to cap the conversion of how much they're able to look like. I've talked about it here with stuff. So, again, these are all basic things that you need to know, but I wanted to start with it goes very complex, but I wanted to just give you like a real basic idea of, dilution, what to look for, what's an S1, right? What's a shelf, what's a warrant, right? A lot of times warrants can be higher and people may want to run them up so that they can sell the warrants, okay? Are the warrants cashless, right? Zero exercise, cashless. Are they able to sell it at any amount, right? Like Lynx was one. Lynx had tons of cashless warrants. If you look at their past ones, right? Up to 350 million shares, Class A, right? A lot of people got burnt on Lynx, right? They were selling however many million shares. It says it right in the filing, right here. I don't even need to look. Just click the prospectus. Up to 346 million Class A ordinary shares underlying the Series B warrants. Look at how many shares they have, which contain zero exercise option. And I bet you, more than likely, it says that they were I want to see, actually, it does. If you look at links right here, it says it again. As a result of this feature, we do not expect any of the proceeds. Here. Right here, guys. If you got burnt on links, this is how you saved yourself. As a result of this feature, we do not expect any of the cash proceeds, yada yada, of Series A and Series B, because when they could elect the zero exercise option, basically they're saying is, why would we not do zero exercise if we can do it? If we have no reason to believe that they're not going to take cashless warrants if they have the ability to do it. They're literally telling you that they're going to sell cashless warrants. Hundreds of millions. Why would I ever touch this stock? Ever. Why would I ever touch this? It doesn't make any sense, right? Another thing that's important to know, and I talked about this last week, right? You looked at when Lynx did a reverse split. Lynx did the reverse split, right? Caught people off guard. But I talked about this last week. If you look at their filings, what do we have? British Virgin Island. What did I tell you about British Virgin Island? They can announce reverse splits anytime. Anytime they can do a reverse split, they can just announce it. Do they vote? Yeah, technically, but it's closed voting. They don't have to announce it to the public, right? Like when they announced their, on the 24th, the board held a meeting, they approved the reverse split, and we're doing the reverse split on X whatever day. They vote, but it's not open voting. They don't need to give you warning. They don't need to tell people about when they're voting. They can just do the vote, announce it, and then have the shares reverse split anytime they want. That's why I don't touch these most of the time. I mean, listen, there's going to be good setups that are British Virgin Island, and sometimes you see it tried and you know the risk. But that's why, like, when I talk about swings, right, and I say it's Cayman Islands, if no reverse split approved, they're not diluting. I love those because they're so safe. You don't have to worry about waking up the next, I would rather wait 2 weeks for a play to run than worry about getting hit with this and the price drops 40% instantly, whether you're at work or, you're, whatever it is you're doing. I don't want to have to stress about that. I like stress-free trading, which is almost impossible, but, at least as stress-free as you can. So that's why I stress how important it is to be able to check. Please, it's so easy. Just check reverse splits. See if they have a reverse split approved. See if they don't. See if they're voting on a reverse split, right? When are they voting? Okay? If they're voting in a week from now, there's no reason to, just leave it alone, right? Like, if you think it's going to run in a week, maybe not, but there's plenty of other plays out there to be able to do it. There's no reason to look. Look at these filings, guys. This is all free, by the way. You don't even need to pay for this on Dilution Tracker. It's all free. Just look at it. Take the time. When you start to get the hang of it, it doesn't take long. Actually look through. Click on each filing. Click on what they are, right? Like, people say, oh, they filed S3s. An S3 is just a filing showing how many shares an insider owns. Doesn't mean that they bought them. A Form 4 is when a company actually purchases shares. A Form 3 is just showing you how many shares are owned by insiders, okay? So if you look at all these Form 3s, they're Form 3s, but it's showing that they own nothing. They're owning no shares. So it's important to be able to know how important that is. So I wanted to hop on, give you a little bit of this, and I hope you guys enjoyed, and we're going to do more of these soon, and I'll see you guys on Monday. All right, later.